Quick note, if you're in LA, San Francisco, Sacramento, Fresno, Bakersfield, Venice Beach, Newport Beach, or San Diego, I am holding meetups in person. We can meet, you can ask me questions, campaign, merchandise, free. It's gonna be fun. Feel free to meet me at any of those. Go to meetkevin.com to RSVP to come. Why would the market start going up if we have all of the same uncertainties that we had all week? We've been uncertain about COVID. We've been uncertain about Afghanistan. We've been uncertain about supply chain shortages. We've been uncertain about the taper. All of these issues have been an issue, leading the market to soften and then sort of sell off. Why all of a sudden are we seeing the market go up? Maybe this has something to do with it. Let's understand this. Kaplan, who is the Dallas Fed president, says he's open to shifting his stance on the taper if Delta curbs the recovery. So this is really interesting. Dallas Fed President Robert Kaplan said he's open to adjusting his view that the Fed Reserve should start tapering its asset purchase program sooner rather than later if the Delta variant persists and hurts economic progress. So this is interesting. So in other words, he's saying if Delta continues to suck and continues to create issues with COVID cases going up, then maybe we don't taper yet, which is kind of crazy because we're already pumping money into the market like crazy. And this essentially would continue that $120 billion per month of treasuries and mortgage-backed securities, which just seems wild. But like personally, I kind of want to see the taper happen sooner because it lowers our inflation risk. If they're saying, hey, we'll wait on the taper, we'll just keep printing that funny money, then really potentially we're increasing the potential for eventual inflation and higher pricing. Kind of interesting. So I've got to be agile, open-minded, and avoid being rigid about if I saw that Delta variant was going to be persistent enough or unfold differently, say, than it has in other countries, the UK or India, and be more challenging to where it starts to affect demand. Okay, so in English, he's like, dude, if Delta goes bad, I'm gonna change my mind. Let's see, I've got to take into account, we'll adjust my views accordingly. Most Fed officials, see, this week we also got the Fed minutes, which were a little bit more hawkish on tapering, which hawkish means like they're more interested in spending less money and printing less money. Being more conservative, fiscally conservative is often deemed as hawkish, like a deficit hawk, right? But this is fascinating because now he's basically saying, hey, even though the minutes said that, we're open to U-turning. Okay. So let's see here. Yep, we talked about the minutes. COVID cases have spiked across the country. We've got a month or so to see how this all unfolds. Interesting. So what they're saying is in September, towards the end of September, they're going to decide. This is actually a potential catalyst moment where maybe if we have a dip, we would see that dip between now and the 20th, maybe of September or mid-September. And then what if in mid-September, the Fed goes, you know what? We decided we're not going to taper this year. Does that potentially push us into a euphoric rally? Does that mean today's bull trap is not necessarily a bull trap and that maybe the market's trying to potentially price in, oh, sweet, we might still have funny money for a while? That's very interesting. This is fascinating. Let's go back to this because that's what we're seeing here. While the U.S. unemployment rate fell to a pandemic-era low of 5.4% in July, vaccines rose to a record. Okay, great. Highlighting businesses' persistent struggles to hire enough workers. So we continue to have the worker shortages, continue to have childcare obligations. We do have enhanced unemployment benefits ending September 4th, but that could potentially put more of a struggle on folks, reduce the cash people actually have on hand, while at the same time the Fed doesn't potentially taper. Gosh. See, everything is contingent on Delta right now. And the market is, I think, excited today over the potential that, okay, yeah, Delta might be here more, but you saying you're going to give us some more of that stuff? Which is really interesting. So when I weigh the efficacy of that versus side effects, that's why I've said that we'd be a lot healthier to start weeding off these purchases as soon as we're able to. I don't know how effective these purchases are at this stage. Right, exactly. So he's still leaving that skepticism up, but this is a big piece right here to suggest that, hey, maybe if Delta goes bad, we won't continue to taper. So let's understand that a little bit. I think the easiest way to understand that is let's do something graphically. So let's see here. How can we do this? How about, here we go. So this is my graphic on what I think is happening in the market, right? So we've got this we have this expected curve of inflation in red. And then we have in green the current and expected path of inflation, showing you that inflation has been higher for longer. Then we have what potentially delta could do. And see, delta, I've mentioned this before, delta could lead to deflation, temporary deflation, which is this purple line going down. And what Kaplan here is saying is, well, if we have that deflation occur, then maybe what we need to do is we need to print more money longer to minimize this and basically try to curb that deflation. Do something like this, right? By doing so, though, they're injecting more money into the markets, and it makes you wonder if they inject money in to prop up deflation over here, and maybe we do have that sort of deflationary curve that looks like this. It's a little bit better. It's propped up. Does that mean we're going to see more inflation up here in that longer run, right? So that's really what we're facing here, is this concern over it all relates back to inflation. And this talk about taper is this temporary stimulus where potentially we could see lower inflation or deflation, while at the same time more money in the market. And I think the market is being very short term right now because the market is very uncertain about the longer term. So it's easier for the market to go, oh, you're saying we might have some more green for another like 3 or 4 months? Okay, yeah, sign me up. So it's almost like the market is being so super short term, like 3 to 4 month outlook here, because there's so much confusion about China, when are rates going to go up, the supply chain issues, the port constraints, right? And Delta's basically trying to get people to line up here to prepare for a potential COVID winter again. So this talk about maybe not tapering as soon is, first of all, like a U-turn from the aggressiveness we've heard over the last few weeks. So we're going to taper soon, and we're probably going to taper faster and quicker than we thought. And now we're U-turning to, well, but if Delta comes back, you know, maybe we need to chillax a little bit. In fact, take a look at this. We go to look at the 10-year Treasury yield right now, which is it's sort of our tell of what's going on with people's expectations on inflation. We can see the 10-year bumped up a little bit today. Not much. It went from 1.24 to 1.55. But that movement up is maybe a little bit of a tell that now the bond market's going, oh, well, if we're not going to taper as soon, maybe that does mean we're going to have a little bit of a longer inflationary pressure, and maybe 10 years need to push up again. Really interesting. What's this? Quick link to the Fed taper plan. The Fed's plan to taper support is just one of several hurdles for the bond market. Let's take a look into this. Here's just a CNBC Pro article touching on this as well. Federal Reserve's plans to start exiting its easy money programs this year poses potentially the most serious of several challenges the bond market faces. Okay, talk about yields, maybe stopping the taper. Additionally, continued inflation pressures also threaten to push yields higher. Right, we know this. Tougher road ahead. Okay, it's complications in terms of exactly how we're going to taper or what we're going to do. This seems to be a little bit more of a nuanced article in terms of the workings of the bond market rather than what we just talked about, which is a little bit more broad. So this is interesting. This I think is very interesting, and it's something that's worth paying attention to. So this is why I don't love looking at the minutes, because the minutes are old. They're like 6 weeks old or a month old. So this new shift of, hey, if Delta gets worse, we're not going to taper, is potentially going to shift and create this new shift. In fact, I'm going to put it in here so we have it. I'm going to put it in here as this little orange shift. If we get the taper to continue, maybe deflation then doesn't come in as much as expected, but we see inflation actually come back a little higher than expected. And so this would be taper delay, we'll call it. A taper delay it's really due to Delta. Hey, look, we can just put a triangle because triangle stands for Delta. Anyway, interesting shift by the Fed, worth paying attention to. So thanks for hearing me out on that one.